Okay, hello and welcome everyone. Welcome to JFD Brokers Traders Tea Time with me, Darius Anucauskas. Today's the 27th of December 2018, so welcome everyone. Welcome to this Thursday's afternoon session where we're going to have a look at the markets, a few charts as always, but before we do that, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay guys, so now then let's jump into the charts. Now the first one I want to touch on here is gold. Now gold, looking at this one, continues to pop higher. Looking at this daily chart here, you can see we had a nice retracement yesterday, a little bit to the downside here, found its support near the 1266, that key in a way kind of psychological level. To be honest, I mean, I was talking about this level here in the past in my previous videos, and you can see that the 1266 now acted as a very nice area of support from which gold stays bouncing to the upside. Certainly the market, the equity negativity is still in the air, and gold is kind of playing this safe haven role. So the next potential area here for resistance that we're keeping close eye on is the 1283.5, something like that, approximately there, marked by near the highs of the 19th of June and the lows of the 21st of May. So quite an interesting level that one is. Certainly if that doesn't stop it, then of course we'll start aiming for the psychological 1300 level, but just slightly above that we do have this little area of resistance near the 1308, approximately there. You could keep an eye on that one, but for now guys, certainly the first level that we're keeping a close eye on is the 1283. Now also don't forget a possible scenario where we could see maybe a bit of a correction here to the downside if, let's say, this commodity wants to travel further up here in the future. And of course we do have a bunch of upside support lines. Of course these are very steep and in a way tentative, so that's why guys, these are just for like your for guidance, and just we're just gonna keep them as for reference. So for now guys, if let's say this travels higher but then fails to move above the yesterday's highs, which were near the 1279 level, then, well, I mean, probably this 1283 level is kind of slightly off the table for now. We could potentially see maybe a bit of a correction here to the downside, and even if it's going to drop back down below the 1266, still not all is lost for the bulls. I mean, we could see this one traveling a little bit lower here, potentially maybe testing this first little steep upside support line taken from the lows of the 28th of November. But if that doesn't hold, still not all is lost for the bulls. We have another potential upside support line here, in a way tentative one, taken from the lows of the 14th of November. So these two lines basically can kind of support the upside scenario. But let's say if this starts dropping lower, and if we drop below the 1241 level, approximately there, certainly we could see some further declines here, maybe a little bit going down towards the 1219 even. So, but as you can see, we do have another potential area here, another potential area of support, which is this upside line, medium-term upside line taken from the lows of the 16th of August. So in a way, a lot of things are supporting the kind of the bulls right now. So even from the short-term perspective, of course, we do have these upside support lines. From the slightly near-term perspective, we do have this this medium-term upside support line. But in order for us, let's say, start looking at this one from the negative perspective, and let's say start looking at much lower levels here, of course you probably understand we need to see this break here below this this upside support line here. Now, of course, there's quite a bit of a far way to travel for gold from where it is right now, so that's why the downside, this kind of long-term downside idea, is kind of slightly off the table, to be honest, guys. So for now, keep your eyes on the 1266 level. Let's see how that plays out, and of course, keep your eyes on yesterday's highs near the 1279s. A break above that could open the path towards this slightly higher level near the 1283-84 area, approximately there. Jumping into another precious metal, which is platinum, and platinum, to be honest, is looking quite less attractive, let's put it that way. From the kind of near-term perspective, you can see it's trading below this medium-term upside support line here, taken from the lows of the 16th of August, but at the same time, it's also trading below this short-term downside resistance line taken from the peak of the 7th of November. So in a way, kind of everything leads more towards the downside. The only thing is that you can see that it's struggling to drop lower here, and in a way, kind of creating higher lows here, very small ones, of course, but nevertheless something for you guys to keep an eye on, because in order for us now to, let's say, start examining the higher, much higher levels, we probably need to see a nice good pop here above the 800 level, the psychological 800, or even better, even the 803, marked here by these highs. You can see that on the 13th of December, well, platinum was not able to kind of close above this level. It managed to break it to the upside, but then quickly reversed back down. Kind of this was the opening price here for the 13th of December, and also marked by the near the highs of the 26th of December, which was yesterday. So in a way, that's why we're going to be looking at this one here. A nice good pop above this downside resistance line, of course, automatically would place the commodity above this line as well. So what you could do as well, you could have a look at this little high here that we had on the same 13th of December. So that was approximately around the 808 level. So in a way, for those who are more on the cautious side, you could in a way wait for this level here, and until we kind of get a nice pop above this, then you could aim for higher levels. And higher levels, of course, the first potential area of resistance could be around the high of the 30th of November near the 821 level, and then you could go a little bit higher here towards the next potential area of resistance near the 826, just slightly above this one, or even actually going all the way here towards this upper to retest the this upside support line here, this medium-term upside support line from underneath. So in a way, guys, for now, long story short, keep your eyes on this little downside resistance line. If we get a nice pop above it, then yep, keep your eyes on the 808, and then we could then see this one traveling a little bit further, but we'll get to that point if we see that break. Jumping into GBPCHF, now this is an interesting one. I was covering this one last week, and basically we're now kind of stuck here in this little range. So probably it's better to jump into a 4-hour chart just to show you what's happening here. So you can see that it's kind of currently getting held here again by this 124.85 level, approximately there. If this continues to rebound here and pushes higher again, certainly this confirms this again. This confirms this range and how valid it is and how important it is, and basically means that once we get a nice pop here, either through the upper side here or a break below, then probably we could see maybe a bit of a stronger move here, either in either directions, of course. But for now, looking at this, for now it continues to trade here below this downside, this short-term downside resistance line taken from the highs of the 26th of November, and this is where we're going to keep an eye on. And if we do get a nice pop here above this upper side of this range, then well, we still need to see a nice good pop here above this downside resistance line as well. And to be honest, for those who are really on a more of a cautious side, you could in a way wait for the 126.45 level or 26.50 approximately there. You can see that this level has been, it's also actually coinciding here on the 4-hour chart, coinciding with the 200 EMA. So in a way, a nice good move above this could potentially lead to further acceleration of the rate, and we could then aim for the 128 levels and higher, of course. But for now, judging from the picture that we're seeing here right now, it's kind of stuck here in this little range. So let's continue monitoring it. If this suddenly drops below this below the lower side of the range, then, well, keep your eyes on these recent lows that we saw here in December. So, or in other words, the for now the lowest points of December, and that was approximately around the 123.80. So in a way, a break below the 123.80 could open the path towards much lower levels. So for now, guys, certainly this is a very interesting pair. It will be even more interesting once we get a nice pop through either of the sides, either through the upside or through the downside. And jumping into Aussie dollar now, so the Aussie dollar is moving lower. Certainly, as you can see on the bigger picture, it kind of got back below this downside resistance line here, taken from approximately around the 16th of February, this long-term downside resistance line. So the pair is trading below it now, but it's currently not far from key important area of support. And let me just jump into daily back here, and basically that was the lowest point of this year, near the 0.7022 area approximately there. So basically this is going to be the level for us to watch, because if this gets broken, then yep, it's opening the path towards much lower levels, and probably the next potential area of support could be the psychological 0.70 or even lower, the 0.6970, which was, and going back into history, the 0.6970 was the low, near the lows of the 9th of February 2016. So keep your eyes on that one. But again, in order for us to consider that level, we would need to see a nice good drop here below this year's lows, near the 0.7022, and this is where the pair is currently trading at right now. So brace yourself. We could see maybe a bit more downside if this, let's say, suddenly reverses back up. Well, I mean, for us, in order to consider higher levels, we would need to see a nice good move above this downside resistance line, and only then we'll aim for higher levels. But for now, to be honest, the upside is slightly off the table. So looking at the Euro Aussie now in this case, so as you probably understood, so the Euro is moving higher today, and this is what's happening with the Euro Aussie. Euro Aussie, since it reversed here on the 3rd of December, once it reversed to the upside, it continues to push higher. It kind of is aiming now for these highs, the highs, and I could probably say, yep, and these were the highs of this year, basically. Near, so the first potential area of resistance could be seen here near the 162.85 zone, marked by the high of the 16th of October. But to be honest, slightly above that, we do have a much more exciting level of resistance here, which is the 163.55, and as you can see, that was the highest point here this year. Certainly, in order to kind of consider these two levels, we need to see a nice good close here of the daily candle above this key area of resistance near the 162.10. This way we could then target, like I said, we could target the 162.85 or even the 163.55. So quite exciting for this pair, and of course for the downside, as you probably understood by this chart, this is the level that we're gonna keep an eye on, is this low, today's low, and that was approximately around the 160.50 level. So a nice good drop below this could open the path towards much lower levels. Of course, initially we'll look at this obstacle at around 159.50, but to be honest, a much better potential area of support is seen here near the 158.85. But then again, guys, I mean, that's in terms of the downside, and only if we get a break below the 160.50 level. But for now, let's see how this plays out. The only thing is, what I'm hoping it's not going to do, it's going to start ranging here, so between the 160.50 on the downside and the 162.10. But we've seen that happening many times in different pairs, so be very cautious for now. Keep on monitoring this. Probably it's already quite overextended, let's say, for today, but to be honest, let's see if it still has a bit of gunpowder in it. Okay, guys, I hope you found it useful, and thank you very much for watching and listening. And if you want to join me tomorrow morning at my Trader's Espresso, and that's 7 o'clock GMT time. But for now, thank you very much for watching and listening, and bye-bye.